video, we'll cover what could happen if you continue working while receiving early retirement benefits and a demonstration of the swap the spouse and the primary button. When the retirement dates show that you or your spouse are taking early retirement, you could incur penalties if you continue working. To see the impact on your earned income, click on the orange check boxes for the persons working. This will cause green boxes to appear. There is a separate section in these green boxes for the primary and the spouse. For each year, there is a set of instructions telling you the number of months impacted. So if you make $12,000 per year and it says enter 10 months, you would enter $10,000. There are two parts to your income. First is your gross pay. Enter this in the first column. Then in the second column, you would enter any pre-tax withholding. This is your share of employer-supplied health insurance premium deductions, your health savings account, HSA, deductions, or flexible spending account, FSA, deductions used for paying medical expenses with pre-tax income. The values you entered are compared to the earnings test defined by the Social Security Administration. The earnings test changes every year and are announced at the beginning of each year. Each time this tool is downloaded, it contains the current values. Any excess earnings are penalized by reducing benefits. The column labeled penalty will show the impacts to the primary beneficiary, and the column labeled spouse penalty will show the impacts to the spouse benefits. Please note that excess earnings for the primary could impact benefits for the spouse. The benefits column will show total benefits paid in that year. This is a full year value, even if only a part of the year was impacted by the early retirement test. In the spouse section for Martha, you will see that some instructions say spouse, benefit, penalty, impact shown in George's section. This occurs when George's earnings impact Martha's spousal benefit, and Martha also had earnings. The impact is only shown in one place. If I removed all of George's income for 2022, the penalty and benefits for Martha in 2022 will show in her section. If you change the retire date, the death date, click the swap the spouse and primary button, or uncheck the orange boxes, all the values for earnings are zeroed out. However, if you save a scenario with earnings entered, it can be recalled. Now let's talk about swapping the primary and the spouse. On a prior video, I said we would review the swap the spouse and primary button once we had some scenarios. Well, now we have them. When I push the swap button, you will see the following. Martha becomes the primary, and her calculated full retirement date and benefit amount moves with her. George becomes the spouse. His full retirement date and benefit amount moves with him. Also, the survivor full retirement date now reflects George's birthday. The marriage and divorce dates remain unchanged. The death dates, retirement dates, and future divorce dates are all empty. And early retirement earnings are zeroed out, and the green early retirement earnings section goes away. Now we could enter dates in the field again and build individual scenarios, but instead we will select Create 100 Scenarios for Married Couple and hit the Generate Scenarios button. Now we will take a break while the auto scenarios process. Now that the scenario generation process is complete, you can see from the message that there are 138 scenarios. Now let's look at the scenarios sheet to see the results. Here in one list, you can see all the saved scenarios. Notice that there is a mix of saved scenarios, with the first set showing George as the primary and the next set showing Martha as the primary. Now that there is a mix of scenarios with both George and Martha being the primary, when you do a recall, it could cause the primary and spouse to swap like this.